Hey crypto friends, my name is Garrett and welcome to Altcoin Radar. Today guys, I'm going to show you guys how to trade perpetual Bitcoin futures from a complete 5-year-old's perspective so that it's easier for everybody to learn. All right guys, now guys, this video is going to be literally from an Eli 5 perspective, or if you don't know what Eli 5 means, it's going to be from an explain like I'm 5 years old perspective, okay? The reason why I'm doing this, you guys, is simply because it's easiest for most people to understand without getting too technical. Because here's the thing, you guys, anybody can go on the internet and anybody can look up what futures means or what, trading futures is like. But here's the biggest problem that a lot of these people that are writing these articles, face. The thing here is most people don't understand, even after reading these articles, they don't even understand, what they are or, how to trade them or anything like that, okay? Anybody can write a technical article, okay? But the real goal here is to explain it to people who don't understand technological stuff, okay? And that's the whole goal with my YouTube channel, and that's the whole goal with me explaining how these types of things work, you guys. All right, so we're going to go through and we're going to learn about perpetual contracts, and I'm going to go ahead and show you how to go ahead and trade Bitcoin futures as well, okay? So guys, as far as perpetual contracts are concerned, from a very basic, and I'm talking super basic level, you guys, I'm not talking any type of technical aspect of this definition whatsoever. Perpetual contracts are literally special types of futures contracts that don't have an expiry date, okay? What this means, you guys, is you can literally, pretty much how this goes is you can literally bet on the asset declining in price, or you can bet on the asset rising in price and not have to deal with, you don't have to deal with, selling out of your position in a specified time, since there is no expiry date with a perpetual contract. So basically what this is, you guys, is you can go ahead and open a short position or a long position. I don't know if you don't know what those are, we'll go through them later when we talk about the trading aspect, but you can go ahead and open a long or short position, and you don't have to worry about closing it in a certain specified amount of time because there is no expiry date on these, okay? When you're trading regular futures contracts, there are expiry dates, and you do have to sell or get liquid, or you will get liquidated in a certain amount of time, okay? So realistically here, you guys, basically with perpetual futures contracts, you are basically there is no time limit. You can basically enter into a trade and you can stay there for as long as you want until you either A, sell out, or until you sell your position, or B, you get liquidated, okay? It's as simple as that, all right? Now here's the thing with trading futures contracts, you guys. When we're trading futures, especially in the Bitcoin crypto market, when we're trading crypto futures, it is extremely, extremely risky, you guys. It is more risky than trading the spot market, okay? And the reason why is because when you're trading futures, you can use what's called leverage, okay? Now, when you're using leverage, basically what that means is you can basically borrow money from the platform that you're trading on, you can leverage, let's say for instance you're trading with $1,000, okay? If you choose to use 5x leverage, you're basically going to be borrowing an extra $5,000 from the crypto exchange, and you are basically going to be trading with $5,000 instead of just $1,000, okay? So realistically here, you guys, if you are trading with leverage, you are definitely things are going to be a lot more risky, okay? But we're going to go through that in a little bit here as well, you guys. As far as where you can trade futures, you guys. So where you can trade futures in the United States, it's going to be different for people who are in the United States based on other people who aren't in the United States. But for most people, you can get away with trading futures comfortably on MEXC, or I know Bybit does it. I know Binance does it. Most people are either using MEXC, Bybit, or MEXC. MEXC, Bybit, or Binance, okay? Now, if you do want to go ahead and give it a try, I am a partner for the MEXC Global Exchange. You can go ahead and give it a try. You can find a link in the description to this video. It will take you right to their website, and you can go ahead and sign up, and you can go ahead and give it a try, okay? Now, as far as exchanges are concerned, that's pretty much it. As far as, the biggest exchanges that, people are using, okay? Now, here's the thing, you guys. Now we're going to go ahead and get started here with trading Bitcoin futures, okay? So here's the thing, all right? I'm using MEXC, obviously, because that's my exchange of choice. That's the exchange I use all the time. And I am signed into my dummy play account here for the sake of, trading on videos like this and stuff like that. So guys, I'm going to literally show you how to do things step by step, all right? Now, here's the thing. The very first thing you're going to want to do is you're going to want to figure out how to get money to the MEXC crypto exchange, okay? So obviously what most people do here, you guys, is I like to use Coinbase. I'm based in the United States, so I use Coinbase as my on-ramp, okay? So basically what I do is, you don't have to use Coinbase. You can use wherever you want, or you can just buy, USDT straight on the MEXC exchange. But what I do is, since I already have, my bank connected to Coinbase, I basically just transfer from my bank onto Coinbase and I buy USDT, and then I send my USDT over here to MEXC. And then what I do, you guys, is once it's into MEXC, the next thing you have to do is you have to go ahead and you have to transfer it from spot to futures, okay? So basically how that works is you would go to, let me see here, we'll go to wallet real quick. Wallet. Okay, we'll go to wallet real quick. And as you guys can clearly see here, we've got a little bit here in my dummy account. And as you guys can clearly see here, you guys, what you would do here is I have everything already in my futures account here ready to go for the sake of this video. But what you're going to do here, you guys, realistically is let's say you just transferred $1,000 into your MEXC account, okay? Basically what you're going to do to get it over to futures is you want to go to transfer, okay? So you, like I just said, you will go to wallet, you'll go to overview, and then what you want to do is you want to click on transfer, okay? So you would click on transfer, and what would happen here is you would be transferring from your spot account to your futures account. Now this might not say futures account at the way you're looking at it. It might say something else, one of these others, but you want it to say futures account, okay? And what you want to do is next you want to click on, the token. Obviously you want it to be USDT, and then you want to put in the amount. So you realistically here, you would go ahead and put in, obviously if you want to trade with all of it, then you click all, and then you click transfer now. And then what will happen, guys, is all of your money that you have in your spot account, the amount that you sent over to your spot account will end up into your futures account, which will be right here, you guys. So overall here, realistically, that is how that works, okay? So the next thing we want to do, you guys, is, now that we got that covered, you guys, the next thing we want to do is we want to go ahead and go to the, the actual trading area, okay? So we can either trade USDTM or CoinM. So realistically what these means is these are perpetual futures using USDT as the collateral. So realistically, this is typically what a lot of most people, use mostly. I personally only trade against USDT. It's just easier. It's just simple to do. So for the sake of this video, we're just going to go ahead and use that, okay? But for the sake of this video, you guys, since I'm not going to use my dummy account, I'm actually going to do the demo trading, because this is actually very beneficial for all of you who have never done Bitcoin futures trading before, okay? So here's what you can do. You can go to demo trading before you want to trade. If you don't want to trade with your overall actual amount that you just sent in here, you can go ahead and do demo trading, okay? So basically what it says here is you can simulate real life futures trading without risking real assets. So that is a very nice thing to be able to do, you guys. So we're going to go ahead and go to demo trading, and let's see where we end up, you guys. All right. So as you guys can clearly see here, we are in the demo trading account, okay? So what we're gonna do now is we want to go ahead and fund it, okay? So what you would do here is, let's see here. I don't know if you can see it with my little screen down here in the bottom right-hand corner, but if you can, where it says wallet down here, you wanna scroll all the way to the bottom. Where it says wallet down here, you want to see where it says BTC, you want to make it say USDT, okay? And then you want to click on the thing that says receive demo coins, okay? So you want to click receive demo coins, and it should say you can receive up to 50,000 USDT, okay? Mine says 40,000 because I already borrowed 50,000 for the sake of this video. But you'll want to type in whatever number you want. I chose 10,000, so I just put 10,000 USDT in there, and then you'll click confirm, okay? And then what will happen is they will be in your account, as you guys can clearly see here. Let's see here. Why is that not changing? Let's see here. Oh, that's because I'm not using, oh wait. So yeah, I don't want to use BTC. I want to use USDT, 10,000. We'll click confirm. Okay, why are we still stuck on BTC? I don't want to use BTC. Okay, so realistically here, you guys, I don't remember how to do this. Okay, so realistically here, but oh well, it doesn't matter. It's still going to do the same thing. So realistically here, you guys, what is going to happen is we are going to eventually be using, what we can clearly see here, 1 BTC worth of trading, okay? So obviously, this is what we want to do, you guys. Okay, so the very first thing you want to do when we are trading Bitcoin futures or crypto futures, obviously, is, here's the thing, you guys. It's the same thing as trading regular, it's the same thing as trading regular, just regular spot market, okay? But here's the thing, all right? We want to go through and look at these things first. So obviously, what you got up here, we've got the current price, obviously. And then right here, we've got the change for the day. So it's literally right now, it's currently up 1.22% on the day. And then we got the index price, which as you guys can clearly see here, it says it's a comprehensive price index obtained based on the prices in major spot trading markets and weighted average of their trading volumes. So there we go. We've got the index price, then we've got a fair price, which is the real-time fair price of the futures calculated based on the index price and funding basis. And then, guys, we've got the funding rate. This is the thing that most people aren't familiar with, okay? So what this means is, obviously, you can see here they give a good detailed explanation here. If the rate is positive, traders who have long positions open pay the funding fee for short positions. If the rate is negative, which is what it is right now, traders who have short positions open pay the funding fee for long positions, and the funding fee must be settled every 8 hours. So as you guys can clearly see, that countdown is going down. It's got 3 hours and 13 minutes and 13 seconds left, and it's currently counting down, okay? And there, as we can see here, in the last 24 hours, this is the 24-hour high, 24-hour low, and the 24-hour volume as well. Okay, so the first thing we want to do, you guys, is we want to decide how much leverage we want to use for each trade, okay? So here's the thing with leverage, all right? So when we are deciding with leverage, this is what this stuff means, okay? In the top right-hand corner in the bar right here, isolated for opening opening a long position or closing or opening a short position, okay? So basically what this means is, let's say you're trading with, we're trading with 1 Bitcoin. So if we go ahead and we do this, hold on, let me go ahead and change this. We want to trade, I wish this wasn't doing this. I wish it would come up with the USDC stuff, because it's so much easier to do things in USDT, in USDT than it is to do in BTC. So I really wish I could figure this out, because this is just kind of irritating and aggravating. Let's see here. Yeah, looks like I'm not going to be able to figure this out within the time frame of me doing this video. So, gosh, I hate it when these little tiny things happen in these videos and I can't figure them out in the videos, because then I have to go through and, try and figure it out. And if I don't figure it out, then I have to redo the entire video, and that takes a lot of time. So without having to do that, we're just going to go ahead and say F it and go through and just use BTC, okay? So realistically here, you guys, when we are choosing what we want to do, so let's say we want to trade with, just 2x leverage, okay? So with 2x leverage, you guys, we are basically going to be trading with pretty much 2 Bitcoin instead of 1 Bitcoin, okay? Because we did 2x leverage, okay? Same thing with shorting. If we want to open a short position and we use 2x leverage, we're basically going to be trading with 2 Bitcoin instead of 1, because we did 2x leverage, okay? Now look at this. If I go ahead and change this to 5, it will go ahead and change down here to 5 too. So basically, you guys, we're going to be trading with 5 Bitcoin instead of 1, okay? So basically, this is how a lot of people make a lot of money by simply trading with leverage like this, okay? Now, here's the thing, you guys. With leverage, here's the thing. Here's how I like to look at it, okay? When more leverage, and when I'm talking more leverage, I'm talking like leverage like 5x all the way up to like 20x or even more than that, you guys. So with more leverage, okay, more leverage is definitely going to be best for people. Using more leverage is best for when you're super confident about a trade, and you feel confident taking the risk. And it's also best for people who want to scalp or day trade futures. Okay. Reason why I say that, you guys, is because when you enter a trade, and you're just going to be scalping and you plan to be in and out of that trade within a very short period of time and you're very confident in it, go ahead. If you think for 100% fact it's going to go, it's going to go up, a good 3% in the next hour, hey, go ahead and open that long position and, put it on, 5 to 10 or even 20x leverage, because you're going to make, obviously a lot more. Okay. Usually what I like to think about here is the more money you're trading with, the less leverage you want to use, okay? Because that will help mitigate risks overall. But if you're using small amounts of money and, trying to do micro trades here and there, if you're using a small amount of money, try to, if you feel more confident, go 10 to 20x leverage, why not, right? But it really all depends on how comfortable you are and how much overall risk you want to take, you guys. But overall here, you guys, the way I like to look at it is I like to use less leverage, because if I'm trading with a lot, then I really don't have to worry about getting liquidated. I don't have to worry about getting liquidated as often because I'm using a lot less leverage. Okay. So guys, as far as long and short positions are concerned, so basically a long position basically means if you are opening a long position, remember you guys, I am explaining this in a way so that people who are not very technical can understand, okay? I'm trying to explain this in a explain like I'm 5 type of version, okay? Because again, not everybody is technologically advanced. Not everybody understands technologically advanced, definitions, I guess you could say. So that's the reason why I explain things this way. So guys, when we are opening a long position, pretty much what that means is we are betting on the price of Bitcoin, in this case, the price of Bitcoin going up, okay? So if we are opening a long position, we are thinking that the price is going to go up, okay? So basically what you would do here is let's say, the price is 19,992 right now, okay? So we will put in 19,990 and we want to trade all of our Bitcoin, okay? We're just going to say F it and do all of it, okay? So we're going to trade with all of it. And then what we're going to do, you guys, because we think that Bitcoin is going to go up to $21,000 within the next hour, okay? So again, you guys, this is all just hypothetical. We're just doing this for example, okay? So we think it's going to go up to $21,000. Okay, so we're going to put all of it at it. We're going to, we're going to use 2x leverage. So realistically, we're trading with 2 Bitcoin instead of 1. And as you guys can clearly see here, buying 1.99 BTC, using 100% of our portfolio. And what we want to do here, you guys, is, since we're opening a long position, you can also check this as well, this little box right here, long, take profit, and stop loss. So before you even open the long position, you can set your take profit price and your stop loss price as well, just right here before you even open the position. So that's pretty nice also, but we're not going to go ahead and do that. So realistically, you guys, what we're going to do here is we will open this long position, okay? So we'll go ahead and open it at, it's lower than the price I wanted to open it at. So we'll go ahead and open it at 1,000. Oh no, now it's back. Okay, so 19,995. Let's see here. We'll open it up at 1995, and we'll open the long position. All right, so we will open it, and as you guys can clearly see here, we are currently, the open order is down here, and you guys can clearly see that it was just filled and it is an open position, okay? So as you guys can clearly see here, I am 2x long leverage on here. I've got my position of almost 2 Bitcoin in here, my entry price of 19,995, and my estimated liquidation price is 13,000. My estimated liquidation price is 13,374. Basically what this means, you guys, is if Bitcoin decides to go the opposite direction and drop instead of rise, if it drops and it drops down to $13,374, pretty much what this means, you guys, is my position is going to be closed, and basically I make nothing, okay? I make nothing, and in fact, I lose pretty much everything, okay? And that's pretty much what that means, okay? So realistically here, And how this goes, you guys, is because I only leveraged 2x, I have a pretty low, I have a pretty low risk on my liquidation price. Okay. If you were to go ahead and open this position with like a 20x leverage, this number would be higher. Okay. It would be probably roughly in the 15 to 16,000 range. So realistically, my liquidation price would be like 16,000 instead. Okay. Something like that. All right. So realistically here, you guys, the more leverage you're using, the higher your liquidation price is going to be. Okay, so there's not going to be very much of a spread between the amount that you bought in at and your liquidation price. Okay, so the more leverage you have, the shorter the gap is between your entry price and your liquidation price. Okay, the more leverage you have, the less leverage you have, the wider that gap is. Therefore, it's safer to have less leverage than it is more leverage, okay? So as far as that is concerned, I know it's kind of confusing, you guys, but as far as that is concerned, we will go ahead and close this one now, okay? Because again, this is just a fun, this is just a demo account, so it doesn't really matter, okay? So we're just gonna go ahead and instantly close this, all right? So we instantly closed that. So now we still have, let's see here, we have 0.99 BTC, okay? So now we're going to do the same thing with a short position. So short position is the same thing, you guys, except it's the opposite, all right? So with a short position, we are betting on the price going downward, okay? So if we think the price is going to go downward, then we will open it here at, let's say, okay, so currently it's trading for 19,965, okay? If we think that the coin is going to go down to $18,000 within the next, 12 hours or within the next 5 days, we'll go ahead and open a short position because we're betting on the price going down, okay? So realistically here, we will go ahead and type in 19,960, and we want to bet all of it pretty much, and we will open the short position, okay? So 19,660, actually no, we will go 19,970 since we're right there. Actually, we'll go to 19,975 since we're right there. No, we'll go 19,970 so we get in right away. So 19,970, and we will open a short position. So short position open, and it got filled right away. So we are short right now, 2x short. As you guys can clearly see here, same thing, my entry price. And then since we are betting against it going upwards and we're betting it going downwards instead, the liquidation price is going to be higher than the actual current price. So if Bitcoin decides to skyrocket and go really high instead of going down, if it goes up to, $39,568, then my position is going to get liquidated and I'm going to lose all of my money. Okay. That's pretty much how that works, you guys. Since I am, using leverage. All right. So that's literally simply how that works, you guys. Now, overall here, you guys, this is going to tell you now your unrealized P&L and yield. This is basically telling you how much profit and loss you've made so far throughout your position that you've entered so far. So this clearly tells me, I'm currently winning right now. I'm currently winning right now. I'm up 0.00 this much Bitcoin. Okay. As you guys can clearly see that I'm up 0.03%. All right. Which equals out to about $6.30 some cents. So yeah, that's the unrealized P&L. Okay. Now, when you go ahead and instantly close it, so we'll go ahead and instantly close it. And we clearly won right there, you guys. So as you guys can clearly see, position history, you can see all this stuff right here, position history right here. We've got that first one where we went long and the second one where we went short. So you've got that right there, you guys. We've got the wallet where we can clearly see where we started and where we're at right now. So we started with pretty much 20,000, or started with 2 Bitcoin, and started with one Bitcoin total for our own money because we've been using leverage as well, and we're still down a lot. So overall here, you guys, that's how you buy and sell, or that's pretty much how you open a long position and open a short position as well, you guys. So it's pretty self-explanatory, to be honest with you. But a lot of it goes into, now a lot of you are probably wondering, well, how do you decide on which one you want to do? How do you decide if you want to open a short or open a long? So the key thing here, you guys, is you want to figure that out based on your own, based on your own technical analysis. Okay, this is why a lot of people, follow a lot of people who do technical analysis on Twitter, because you want to be able to figure out which way you think the overall trend is going. Okay. So for me, for instance, you guys, I like to use TradingView all the time. I'm using TradingView on a regular basis, and when I'm trading futures, I usually like to scalp them. So I like to be in and out of a trade within 24 hours. Okay, so I typically like to use the 15-minute charts. Okay, and since I'm a MACD and RSI trader and have been for the last 5 years, I only use RSI and MACD, and that's literally it, you guys. So realistically here, you want to figure out, where you plan on buying and selling, and then, or where you think the overall trend is going to go. So what I'll do is I'll literally come out of the 15-minute chart, and I'll go to the 4-hour chart and see what the overall trend is, you guys. So obviously we can see here the overall trend is bearish. Okay. And then we'll go to 1-hour chart and see this chart and see where we're at. So obviously on the 1-hour chart, we can clearly see that on MACD, it looks like we might start to cross over into the green again. But RSI is still kind of mid-range. It's not oversold and it's not overbought. It's kind of mid-range, just sitting there. So it could literally go either way. It could either go up and it could go down. So realistically, I will wait a little bit longer to see if it crosses over into the green. And if it crosses over into the green, what I will do, you guys, is I will end up opening a very short-term long position and try to scalp a good small percentage for the day. And that's simply, literally, guys, that's literally how it works. It's so easy, it's not even funny. So overall here, you guys, that's literally all you got to do. Now, guys, as far as the best strategy goes for trading Bitcoin futures or crypto futures, finding the overall trend, in a long time frame, and the short-term trend in a short time frame. I prefer short time frames for futures, simply because they're a lot. It's a lot easier to spot trend. It's a lot easier to make small daily profits from trading the smaller time frames, you guys, overall here realistically. But again, you guys, if you're trying to, go in at the very bottom of, a bear cycle and try to ride out through the top, you can also make some pretty darn good money doing it that way in the long term as well, you guys. But you don't want to use much leverage when you're doing that, okay? So that's the other thing here. If you're trading and you're scalping, if you want to be in and out of a trade within a day, hey, you might feel pretty safe using, 15 to 20x leverage, okay? But again, don't use your full portfolio, okay? I repeat, do not use your full portfolio. Never use your full portfolio, okay? Especially if you're using that much leverage, all right? So again, here, you guys, this stuff is very risky. So other than that, you guys, I feel like I did a pretty darn good job of explaining what I wanted to explain here. I know things kind of seemed probably like they were wishy-washy here in this video, but I did try to explain as much as I possibly could from a complete beginner's perspective here. So if you guys have any other questions about any of this, feel free to reach out to me on Twitter. You can find the link to that in the video description as well. Other than that, you guys, I feel like I did a pretty good job, like I said. So I will go ahead and wrap this one up. But again, guys, hey, before you guys leave, go ahead and make sure to subscribe to the channel so that you never miss a new crypto and altcoin video from me on a regular basis. And hey, guys, with that said, thanks again for watching, and I hope to see you all in the comment section of my future videos.